welcome in from the aforementioned JPMorgan Asset Management, Phil Camporeale. Phil, thank you very much for joining us here on Fast Money. Listen, I know it's difficult sometimes to talk about the markets and investing, given that everything that is going on, but also there's people out there that are scared. They are worried about their investments, along, of course, with their health. Maybe they're close to retirement, and they're watching the value go down. Are you at JPMorgan Asset Management seeing good values based on any kind of estimates you may have right now? And if so, where?
Yeah, sure, Brian. So good to be with you guys here today. Can't wait to be with you again in person at some point. So before today, we came into trading today, the best 10-day stretch since March of 2009. We were up close to 19% in that time period. Markets don't go up by 19% in 10 days because of fundamentals. Okay, so throw those out the window. But what I think the market is really starting to believe and really wake up to here is that policymakers want to avoid the worst case scenario. For the Fed, that would be a run on cash. And for the fiscal side, that would be some sort of awful economic fallout without any shock absorber. So starting with the Fed, they took the speed and the size are just astonishing. It took them 17 trading days from an all-time high to get to zero rates, and they've already done more QE than they've done in parts of their QE programs of 08 and 09. The real key here, Brian, is going to be LIBOR rates. I think that's so important. I think that's the latest positive development. Similarly to 2008, if you go back to 08 and 09, when the market really started to find its footing, it's when LIBOR stopped going higher. That was when the FDIC, I remember exactly where I was when the headline hit, that the FDIC would be guaranteeing bank paper for up to 3 years. That was a very important announcement. And I think that's some of what we're seeing now. I think that's also going to limit volatility. Listen, LIBOR is the foundation for capital markets. Without business being able to fund themselves, and also that's an individual borrowing rate, you can't build on top of it. So that's kind of the first step here. And with the announcement yesterday with the commercial paper funding facility starting on April 14th, I think more stuff is yet to come. And on the fiscal side, I want to be really clear here. We're going to see shockingly crooked numbers when it comes to economic data. We saw two awful initial jobless claims numbers and the negative 710,000 last week in payrolls. That's the reason why.
Well, Phil, let me jump in here. Does the data matter at all? That's the point we've been making. I mean, I'm not taking anything away from the numbers or our coverage, whatever, because behind every piece of jobs loss is a family, is a wife, is a husband, is a spouse concerned about their future. But these numbers are so all over the place. The estimates are millions sometimes from each other. Do the numbers matter? Will earnings season matter at all?
Listen, Brian, there's a range on GDP estimates of the second quarter. I thought it was a typo of -8 to -30, right? So what are you supposed to take from that? I think what this monetary and fiscal response has done has bought us the second quarter, and then you reassess, right? And I think for us as multi-asset investors, we really needed balanced funds to start working. We really needed investment-grade corporate debt not to be falling without a bid. We really needed government bonds to be able to be a ballast to the portfolio. There was a week in March there, Brian, we were really worried because cash was the only thing that mattered, and that has certainly changed, and I think that's what buys investors time. You mentioned scared, right, in a scary time. I think this is really where you're supposed to lean on the durability of your portfolio, because your answer should not be, should I be in cash or equity? You have to be able to wait out the storm through diversification, and I think that's what the Fed has provided for.